Good morning, ladies and gentlemen. My name is Vasil Dikov. I am a Senior Account Manager with GDMFX, and I will bring you today's market outlook. We'll start with the North American markets and the events from there. First, the good news. The ADP report printed stronger than expected results for August, indicating a rise of 177,000 in employment versus the projected 174,000 gain. To top it off, the July reading enjoyed a significant upgrade from the initially reported 179,000 increase to 194 rise, hinting that the NFP figure for that month might also be revised higher. US pending home sales also beat expectations with a stronger 1.3% rebound in July, nearly twice as much as the projected 0.7% rise. However, the June reading was downgraded to show a 0.8% drop from the initially reported 0.2% uptick. As for the not so good news, the Chicago PMI chalked up a sharper than expected drop from 55.8 to 51.5, much lower than the 54.1 consensus. This means that the manufacturing industry expanded at a slower pace in August compared to July. And an upbeat Canadian GDP. The June monthly GDP reading surprised to the upside with the 0.6% expansion, outpacing the estimated 0.4% growth figure. The June reading was also enough to make up for the previous month of 0.6 contraction, bringing the economy's year-over growth to 1.1% versus the 1% consensus. And things aren't looking as bright as sunny for the quarterly perspective, though, as the second quarter GDP reading is actually down with 1.6% compared to the previous quarter of 2.5% growth figure. Components of the reports revealed that the drags were mostly the 0.5% decline in business investments, its sixth consecutive quarterly drop, and the 16.7% slump in exports. Also, the dollar strengthened Wednesday against the yen on the final trading day of the month, extending a string of gains that began Friday as investors once again warmed to the possibility that the Federal Reserve could raise interest rates in the coming months. The Dow Jones moved 4 points down yesterday, the Nasdaq moved sideways, and the Dixie remained the same at 96.03 points. The currency pair movements were in the range of 20 to 40 pips across the board. Today, we're going to have initial jobless claims in the US, unit labor costs, non-farm productivity, market manufacturing PMI, ISM manufacturing PMI, construction spending, BBC manufacturing PMI from Canada, and on Friday, the NFP and unemployment rate from the US. Moving on to Europe and the European markets, we had the UBS consumption indicator from Switzerland at 1.32. The German unemployment change was 2,000, better than expected at minus 7,000. The German unemployment rate seasonally adjusted was unchanged at 6.1%. The Italian unemployment was 0.2%, better than expected at 11.4%. The unemployment rate in Europe was 0.1% weaker than expected at 10.1%. The CPI from Europe for the yearly basis preliminary was 0.1% weaker than expected at 0.2%, and the core CPI on a yearly basis preliminary 0.1% weaker than expected at 0.8%. The euro versus the Japanese yen was 54 pips up, the DAX 30 73 points up, and the CAC 40 19 points up. Today from Switzerland, retail sales, from Europe, manufacturing PMI, from France, Italy, Germany, Cyprus, and the euro area as a whole. The UK markets, nationwide housing prices seasonally adjusted for the month, 1.1% better than expected at 5.6%. Nationwide housing prices non-seasonally adjusted yearly, 0.9% better than expected at 0.6%. With fresh positive data from the housing market following the consumer confidence readings from Tuesday, Sterling managed to reverse its losing streak. Nevertheless, the pound is on a 4-month losing streak after the Brexit vote, and the indications that the Bank of England may further ease its monetary policy may drive sterling even lower. Economists are expecting a possible rate cut in November. The FTSE 100 was 39 points down, closed at 6,784 yesterday. The pound versus the Japanese yen was 102 pips up. The pound versus the Canadian dollar 90 pips up yesterday, and the pound versus the Aussie 71 pips up yesterday. Later on today, we're going to have market manufacturing PMI, and on Friday, we're going to have construction PMI from the UK. Moving on to Asia, the foreign bond investments in Japan was 327.3 billion yen, less than the previous at 105.7 billion yen. Foreign investment in Japan stock rose with 222.5 billion yen, up to minus 7.8 billion yen this week. Chinese non-manufacturing PMI dropped with 0.4 points at 53.5. Chinese MBS manufacturing PMI 0.5 better than previous at 50.4, and the Caixin manufacturing PMI 0.1 weaker than expected at 50 points. Asian equities erased earlier losses. Australia dollar strengthened the most. Industrial metals advanced after data indicated manufacturing is picking up in China, the world's second biggest economy. The Nikkei 225 was 25 points up. The currency pair movements, apart from the pound versus the Japanese yen, were in the range of 20 to 40 pips across the board. Moving on to the Pacific section of the market. From Australia, AIG performance on MFG index 46.9 reading. Retail sales in Australia seasonally adjusted for the month 0.3% weaker than expected at 0%. And the commodity section of the market, the EIA crude oil stock exchange decreased by 225,000 barrels for the week ending on September the 2nd. Crude oil prices slumped as the US inventory soared last week. The front-month crude oil contract declined for a third consecutive day, losing 3.56% to settle at $44.6. And for the 24 hours, gold declined with 0.16% against the US dollar and closed at $1,312.60 per ounce after upbeat US private sector unemployment data stock speculation that the US Federal Reserve would hike interest rate in the near term. The S&P 500 index had a range of 16 points. It is at 2,172 right now. Gold had a range of $12 up to $1,307 right now. Silver had a range of 33 cents at $18.69 right now. Crude oil had a $1.90 range up to $44.92 right now, and natural gas is trading at 2.85 at the moment with a range of 2 cents. Today we're going to have the natural gas storage change, and on Friday, as usual, the Baker Hughes oil recount. Thank you very much for your time. Have a nice day and good luck.